Hello, my name is Blaine Anderson. I'm a certified financial planner with Bander Wealth Management, and I'd like to share with you a strategy today that is likely for an investor that wants to be a little more aggressive. This includes a cash management strategy. It's a way to accelerate your investment power, and I feel accelerate your investment opportunities. So what I'm going to share with you is what's known as a collateralized line of credit. And this is based upon your non-retirement account here at Bander Wealth Management. If you're familiar with a book by the name of Rich Dad, Poor Dad by Robert Kiyosaki, then I think that this strategy will really resonate well with you. The way I look at it is this is us thinking like a bank. We are applying the principles of good debt and bad debt. And to me, this is an example of good debt. So obviously, you've got to be more comfortable with that idea of good debt. And I want to share with you this strategy. It is very similar to a HELOC, so a home equity line of credit, but rather than go through an appraisal process, have origination fees, and use the equity in your home, we're going to actually use the equity that you have here with Bander Wealth Management with your non-retirement account. So for example, if you have $1 million in an account with Bander Wealth Management that's a non-retirement account, then what we can do is set up a collateralized line of credit where we use that $1 million as collateral, and we have a relationship with a bank that we use back east. And essentially what they will do is then allow you to have access to 60 or 70% of that account in cash. So the idea is that that $1 million stays working for you, but then you can access $600,000 to $700,000 that can be used for other outside investments or ventures or opportunities. I'll share with you a couple examples that I've seen over the years of how this is best utilized. This, to me, is an outside-the-box strategy. And like I mentioned, maybe for that more aggressive investor or business owner, I've seen this strategy used for real estate purchases. I've seen this strategy used to make charitable contributions or even to pay taxes. I've seen it used to fund business expansion. I've seen it to even fund luxury purchases or to serve as bridge loan financing. Some of our clients are car owners or RV owners, and they will use the cash to finance the purchase of some of their trailers or some of their cars with customers. And so the whole idea, if I was to give a fishing analogy, I would say is that we have two lines in the water. Number one, you have your investment portfolio here with Bander, and we certainly have an expectation for those funds to remain invested and to continue to work for you. And then we are able to access cash that can be used outside of your portfolio, whether to purchase real estate or a second home or a rental property. And like I said, even used sometimes to pay taxes or fund other investments. But that way, both are working for you. Now, of course, just like a home equity line of credit, there is a cost of capital that's associated with it. I've seen it as low as 2.99%, and I've seen it up during higher interest rate environments. We were able to negotiate with the bank and lock in a max rate of 6.77 for investors. So it is variable. It's based on the index. And this is something that we communicate with clients often about. Interest payments are made on a monthly basis. And what we've set up with Bander is for those monthly interest payments on the line of credit to come from the investment account. So it can provide some portfolio drag on the investments because we're making those monthly interest payments. But the idea is to create positive arbitrage, meaning, and what I would describe as good debt. Yes, we've taken out money and there's a line of credit that's being paid for on a monthly basis. But if both of those lines in the water are working for you, then we're earning more interest and more in return than you're paying in interest. And so that's absolutely the expectation. We've been doing this now for a few years, and I can tell you, we've had, especially when the markets are up, very good results with this. And the idea is simple. If you're paying 5% interest, but you're earning 12% interest, then that difference, that 7%, is to your gain, to your benefit. And so we also know that the stock market when invested for any 5-year period of time over its history, has shown 89% of the time to have a positive gain. So it's not that every year it works exactly as planned, but when we go by the averages, when we're able to have more time in the market, we feel that we increase our opportunity for return. So along with this video, I have an FAQ, a frequently asked questions document that we will provide to you. Oftentimes clients will ask about how long it takes to access that money, and it's a very short period of time. There's no origination fees. We only pay interest when there's cash that's actually drawn against that line of credit. We here at Bander Wealth Management will service both the investment account as well as that line of credit, and interest payments are made from the investment account. There's no underwriting. It's not something that goes on your credit report. Those are a few questions that often come up. I think the main thing is that this principle comes from the book Rich Dad, Poor Dad. It's one that I read many years ago. I believe in the concept. I believe that, of course, sound investment decisions need to be made. This money shouldn't be used for discretionary purposes that are not earning interest or they are not allowing us to think like a bank. But these are all individual circumstances that I'm more than happy to discuss with you. I'm happy to share with you my personal experience as well as many ways that I've seen other investors do this. So it is done with non-retirement account funds. We do have a $500,000 minimum to do this, and that's just to then get the line of credit set up, and that's part of what the bank does. However, we're always willing to go to bat for you or to see what kind of exceptions or opportunities that we can help create as your investment advisory firm. So once again, this is a strategy that might be more for those outside the box thinkers, but is helpful from a cash management standpoint. It helps us to work and think and operate like a bank, meaning how can we earn money and earn more in interest than you might be paying in interest. There are certainly some risks associated with this, but please let me know if you'd like me to send you our template that outlines the strategy, as well as our frequently asked questions that often come up with clients. As always, we consider it an honor and a privilege to work with our clients. This is one of those strategies that we consider to be an advanced financial planning strategy. It does help us as tax smart wealth advisors to also manage tax implications. If we have this set up with your investment account and you have a liquidity or a cash need, it helps us to avoid having to sell positions that maybe have earned gains and that have capital gains associated with them, but still give cash and access to cash and liquidity to you as an investor. So many of our self-employed business owners will use this strategy, or just investors that are looking to increase their investment power and their opportunity. I've seen investors use this to finance and fund other investments as well. So always more than happy to discuss. I hope you found this information useful. Thank you.